Good evening, everyone. My dear fellow colleagues, I welcome you all in this very important webinar from the series on Tax Audit Practice Session 14, Tax Audit of Partnership Firm and Proprietorship Firm. Today, we are going to discuss the provisions with respect to tax audit of partnership firm and proprietorship firm during the preparation and filing of tax audit report. As you all are aware that tax audit plays a vital role in ensuring compliance with tax law and regulations. It helps to identify discrepancies or errors in the financial statements and tax return of the business. From the viewpoint of partnership firm and proprietary, it becomes very important to conduct the tax audit carefully and report the details appropriately for these assessees. Our today's speaker for the webinar, CA Baldev Raj is with us. He will share his thought on this topic. Now I would like to invite CA Kavita Mendiratta, our session moderator, to take over this session. And I am confident that today's webinar will be a valuable addition to our professional knowledge. So over to Kavita.
Thank you so much, sir. Good evening, ladies and gentlemen, esteemed guests and distinguished professional in the field of finance and taxation. A warm welcome to this insightful webinar on the topic of immense significance, tax audit of proprietorship, partnership firms and proprietary. I, CA Kavita Mendiratta, deeply honored to be your moderator for this engaging session. Today, we have a privilege to have a panel of esteemed experts who will share their vast knowledge and experience with us. We have with us CA Raj Chawla, sir, Chairman of the Technical Advisory and Quality Review Board of ICI, a distinguished figure renowned for his profound insight into taxation matters. Joining him is CA Chandrasekhar V. Chitle, sir. He'll be joining afterwards. Our distinguished speaker for today's discussion is none other than CA Baldev Raj, sir, a chartered accountant in practice for over 3 decades with a specialized focus on direct taxation. His contribution to the field are not only significant, but also incredibly impactful. It is my sincere hope that this webinar will provide you with valuable insights and practical solutions that you can apply in your practice. I encourage active participation throughout the session. Please feel free to ask your questions and engage in the session during the designated Q&A. Your contribution will make the webinar impactful. To begin with, I would like to invite our speaker, CA Baldev Raj, sir. As we have already mentioned that he is a chartered accountant with over 30 years of experience specialization in direct taxation. His extensive experience includes adeptly managing the intricate direct tax matters of both domestic and international clients, with the track record of representing them successfully before appellate authorities in Delhi and beyond. Mr. Raj is closely affiliated with the Institute of Chartered Accountants of India and holds esteemed position in pivotal committees such as Fiscal Law, Direct Tax, and Committee on International Taxation. His role as Technical Director and Joint Convener for the annual Direct Taxes Workshop organized by the All India Chartered Accountants Society underscores his commitment to knowledge dissemination. Mr. Raj's influence extends to lectures and paper presentations at NIRC and CIRC of ICAI, as well as various professional forums. Notably, he presided as the president of Bharatiya Vidya Salakar Samiti Society BVSS in 2015 and 2016. And he currently serves as a key member of BVSS Advisory Board, offering special counsel to its international taxation group. Furthermore, Mr. Raj is an accomplished author contributing valuable insights through BVSS publication on TDS and post-COVID 2019 income tax provision facts. Over to you, Raj, sir.
Thank you, Kavita. I'm here. Audible?
Yes, sir.
Okay. Thank you, Kavita, for nicely introduced myself. I CA Dr. Raj Chawla ji, Chairman TAQRB Board. I thank to the team of this group to invite me to share my experience and knowledge about the tax audit, which is a life of more than 40 years old fact tax audit is introduced in almost 40 years back, and we are still continuing discussing the every years on this topic. And new laws are coming, new clauses are coming, and new modifications, rules, case laws are coming. That is a reason we need to discuss this topic. The today topic has been assigned to me is about the tax audit relating to the partnership firm and proprietary firms. First I'm sharing my screen. Just tax audit a partnership firm and proprietary firm. There is no separate act, separate law, and no separate clauses or rules have been made for the any partnership firm and proprietary. The act and the rules are same for all the only the difference between the tax audit about the partnership firm, proprietary firm, with versa companies and others. It's only the some clauses are relating to the information under Form 3CD is to be relating to the partnership firm or a proprietary firm, which is we can say it is an individual person. There is no special partnership firm's view is given, but we will discuss the all the clauses with reference to these two assessees, partnership firm and the proprietary firm. Partnership, we will also include the LLP also, because as per the Income Tax Act, the partnership includes the LLP also. So there is some restriction, some clauses are there, some sections are there where LLPs, partnership firms provisions are applicable, but LLP is not applicable. We will discuss later on. Before that, I start, it is two things I would like to say to my fellow members. The Taxation Audit Quality Review Board has been formed, and there is a publication has also been issued on the shortcoming on the audit reports in the 2022. That publication is very important for all the members to go through this. And also the tax audit guidance note on the tax audit. Last year onward, last year also this was published, 2022, which is applicable for the 22-23 assessment year. And this year also the new audit, this guidance note has been revised. That is applicable to for the assessment year 23-24. This is which is we are discussing today. My more discussion part is relating to these publications only. This publication is a guidance source for us to understand the concept and the guidance to the professionals. It is also mandatory for us also to follow this guidance note also, and the review which has been made by this board is also landmark guidance for our professional brothers. This Taxation Audit Quality Review Board has been constituted in 2018, and the mandate has been given to this board is to review the reports which has been prescribed under the Income Tax Act and the rule frame there is and the GST Act. And those reports are being issued by the chartered accountants are under the purview of their domain. The tax audit, Taxation Audit Quality Review Board, seeing our report on the sample basis, and on that basis they are verifying the compliance made by the chartered accountant as required by the Income Tax Act, as well as they are reviewing whether the guidance note issued by the Institute of the Chartered Accountant of India are being followed by the members or not. This is a very, very crucial part from the point of view as a professional when we are in the practice, because the effect is very high. If this non-compliance is there on the guidance note as well as the standards are not being followed, then the board has if board is found this board has found that there is any material serious non-compliance is there, the board would refer this matter to the discipline committee. You see, this is a very serious matter. We should very conscious about when we are signing our report and review the before submitting the all compliance is there. We will discuss this in detail. It is not enough. Another provision in the Income Tax Act also is a Section 271F is there, but it's also the department is also reviewing our report, and if they found commissioner or assessing officer found later on that there is a incorrect information report has been furnished by the chartered accountant in the report, tax audit report, they may impose a penalty, very nominal penalty is there, but penalty amount very nominal, but the impact is very high because they may refer also the matter to the our issue about the discipline committee proceeding to take the action against the fellow members who has not followed the or given the correct certificate or report under this audit report. As we are discussing about the proprietary firm and the individuals or partnership firm, there is no prescribed format is prescribed under the any act about this. Okay, what is the format should be the financial statement. Financial statement format is not there. So the every assessee is making their own way of presenting the financial statement. Some are earlier we know as a T form and we vertical form is there. There are two forms are there. Then after this, our institute has accounting standard board has issued the technical guidance on the financial statement non-corporate entity given the format of our financial statement. This is being recommended by the institute to be whenever where the members are being audited the financial statement and giving his observation or report, they should prepare the format under this say. But we are under no this rights or duty making the financial statement is of the assessee, not the auditor. We have to just to review the financials and on that we have to report on that financials. The tax auditor, as per the guidance note issued by the institute, it has been recommended that the tax auditor will consider and invite the attention on the assessee to follow the guidelines appear in the tax publication. So it is our duty to educate our assessee to have this financial statement in the format as given in the technical guidance on the financial statement on the non-corporate entities. This is recommended, but it should be followed. It will be better. Further, there is a reporting part because once we are, as per the tax audit, we have to prepare not only to verify the individual and partnership firm, we have a two dual roles are there. One role is about the we have to report on the financial statement, and second is on the role is to give the audit report on the report on the information furnished in the Form 3CD, which is really known as annexure to the tax audit report, Form 3CA and 3CB. But we found there is no provision in that forms to comply with the revised SA 700, which has been issued by the ICAI. When there is no format is there, no space has been given, then in the guidance note, it has been advised to us that this information, which is the SA 700 is there, we should provide in this information in the space provided in the form number 3CA in subclause 3 or form 3CB clause 5. There are two places where this observation can be given, and we will discuss in later on the detail part, but this requirement is there. So this had been observed also by this board also that this has not been being followed and this has not been considered by our professional brothers to incorporate this in because of there is a space issue in the uploading the form, or otherwise protecting the thing. This will be later we will discuss is. This is we know in the SA 700, there is a assessee responsibility has been provided. What is the assessee responsibility? And thereafter, it has been provided what is the tax auditor responsibility. And this has to be incorporated. That has been recommended in the our guidance note. This is all our SA 700. We all are aware. This is just for a reference. This has been on screen. What is our responsibility of the assessee? Assessee responsibility is to prepare the accounts financial statement and for uh, considering the accounting standard also of the issued by the ICIC. If it is not being followed, we have to always say later on whether this is to be qualified or it has to be we have to report. And what is the tax auditor report? Tax auditor responsibility is our responsibility is to be express on this financial statement and whether it has been conducted in accordance with the standard issued by the ICICI, and those standard has been ethically required. What are the plan are there? This we have to also be given in our how we have done this audit. And these are the all we are know what are the risks are there, and we have got all the informations and sufficient information has been provided. And there is second, as we discussed in the earlier, there is two part are there. We do duties are there. First is the duty about the financial statement, and second is about the information given in the form number 3CD, whether it's accurate information or correct or true and correct picture or not. That also we have to comment as a professional brother. Now this committee has found this about the SA 700. This has not been reported by our professional brother when they have furnished our report. They do not have paragraph relating to this in our report, that is Form 3CA or 3CB. And there is some report, there are reference has been given, but in the physical sign out tax audit report, but there is no part of the main report which is uploaded. Wherever this is a guidance source, it is specifically required or mentioned that under Form Clause 3 of the Form 3CA or Clause 5 of the 3CB, this has to be reported and information has to be furnished for the readers and the department to know about what is the responsibility SSC has followed done and what is the role as an auditor we have played it. This is for about the audit report. This is, we know there is two form of report is there called Form 3CA and Form 3CB. And there is an extra of Form 3CD, which is we are being reporting on the information. Form 3CB, when we are considering the partnership form as well as the proprietary form, we see there is a Form 3CA is whether it is check the whether which form has to be followed, on which report has to be prepared. If you see, the Form 3 says applicable where the accounts has been audited under the other law, then this form is to be filled. And when we see the proprietary form, there is no law where it's required to file the audit is required under the law for the proprietary forms to be audited under the any other law. When we see the partnership form, there is only regarding LLP, the LLP Act has provided if the turnover is more than 40 lakh rupees in a year, then the audit is required under the LLP Act. So when we are auditing the LLP and their turnover is more than 40 lakh rupees and above, then the form number 3CA reporting is to be required to be given. Otherwise, in all other cases, in the proprietary forms as well as the partnership form, other than LLP, the form number 3CB is required to be furnished. And along with this, the reporting, the annexure is, as we have discussed, is the Form 3CD, whereas we will discuss in detail in the later part of our discussion. This has a 44 clauses has been provided under 3CD form, and we as a auditor are commenting on the information which is being filled by the assessee in the Form 3CD. as we have discussed about the reporting part, there are two parts in the Form 3CB, which here we have discussed in the para number 3A and para number 5 of the Form number 3CB. As I have discussed earlier, there is two part of the dual duties are there, auditor on the financial part, and this is for para number 3A, which is in the Form 3CB relating to the qualification about the true and fair view of the financial statement. This is the first part of the duty when we are doing the audit of the proprietary firm. This is the financial statement. On financial statement, we have to comment on that. If any qualification in that required to be furnished or given in our report, that is the para number 3A is precise place where we have to give our qualification in the report. And para number 5 of the Form 3CB specifically concern the qualification on the true and correct reporting in the given in the Form number 3CD. If there is any comments qualification required about the Form number 3CD, means information about the tax audit, then the para 5 is a relevant para where we have to report. And if it is relating to financials qualification, then this qualification on the financial statement, means para number 3A is there where we have to report. In detail, we can say there is maybe a report, our observation is there, comments are there, discrepancies may be a inconsistency, latter qualification is there, which is affecting the reporting about the report about the all the, this is part, first part of the financial statement, which is in para 3A, whether the auditor has received or obtained all the information or not for the key audit, and books or accounts are maintained properly or not. Regarding this has to be reported here. And the law and second part is about the true and fairness of the financial statement. This is the place where we, as an auditor, we as a sole provider and a partnership, we have to comment on the in the financial statement whether we all information has been received, books has been maintained properly, accounts have been prepared, given a true and
Baldev sir, have any issue?
it is just it's okay now.
Yeah, it's okay,
Screen
but
is
your screen. Kindly share
you are
your
able
screen,
to
sir.
you are able to see
No,
the screen.
no, sir.
There is something happening in this system.
Please share your.
You have any doubts? Can you correct me? Please help me.
निसार निसार take the system on team viewer.
It's on already.
Yeah, he will do, sir. Kavita ma'am, take over the session.
Yeah, of course. Sir, Dev sir,
Yes, sir. Yes, ma'am.
can we take up the session without some slides?
I am continue with that.
Of course. Thank you so much.
Thank
Since it's a technical glitch, so we'll be taking the session without slides. Thank you so much, sir.
Okay. Then this form number 3CA, we are discussing in the form 3CA part 3CA. Now if we see form para number 5, that para 5 we will discuss later. Before that, we are on the para number 3A, where we have discussed about that this is the tax auditor has to report about the observation and comments. He has to give about the all information and explanation that he has received about the keeping the proper accounts and the true and financials. We can see have an example of this is in the when we fill the form para number 3A. There is an example where the accounting standard is there, AS10 of the ICIC issued about the property depreciation on the PPE, means property, plant and equipment. And this is all based on the age of the asset. The rate has been defined on the base, it has to be on the life of the asset. Normally in proprietary firms and the partnership firm, they SASSI is being followed the not have the follow this accounting standard, and normally they are follow the tax depreciation as per the Income Taxes Act as per section 32 and on the block of asset and the WDV method. And if that is being followed, it means the SSC is not following the AS10 of the ICIC. So once he is not follow the accounting standard 10 of the ICIC, then it's required to be the qualification has to be given by the auditor in the para number 3A of the form 3CB, where we can write as example, the SEC's accounting policies to charge the rate of depreciation on property, plant and equipment is not in accordance with the accounting standard 10 of the ICICA. The rate of depreciation not based on the life of the assets, but at the rate prescribed under the income tax rule. Since the life of the assets is not ascertained by the SEC, the impact of the non-compliance with this accounting standard on the financial statement could not be determined. However, the rate of depreciation for the purpose of clause 18 are as per the income tax provision only. This is one of the example. There may be other examples also where the SSCs not follow the accounting standard. Normally, we have seen in our practice in the last many years, professional brother also taking much care about these accounting standards, which has been considered. Just like if a related party related party information is to be given in the even all the audit, but normally in proprietary and partnership firm, we are not bothered and not SSC is not giving and we are not qualifying our report also. Now, in that case, we should, wherever these accounting standards are there and not being followed, then the auditor should give his report about these audit as standard has not been followed by the SSC. And this para number, yes, sir. Just a minute. Yes, sir. कर दिया. May I continue? No, screen, where screen is not showing anything. Can you help?
Yeah, it's visible, sir. We can
Screen
see
is
the
visible,
screen. Yeah, of course.
but I am not able to move it. Okay, this is correct. Is okay.
Correct.
We are discussing about the para number 3A. We are accounting standard has not been followed by the FSC. Then the auditor has required proprietary firm and the partnership firm. Auditor is required to comment on that, and the qualification has to be given in the para number 3A. Regarding para number 5, where we have discussed about the information is to be given relating to information furnished in the form number 3CB, 3CD, and that paragraph in any information is given, the qualification disclaimer or has to be given, then in paragraph 5 of the form 3CB is to be given. There may be a number of method there where the disclaimer has been prescribed in the guidance note on the when this share requirement of this information is to be given and not been given. In there is a difference between the auditor as well the assessee. If there is non giving the information properly or the non concurrence with the opinion of the auditor with the assessee, then that's non concurrence has to be reported in the uh, auditor report in 3CB in para number 5. And if any disclaimer is required to be given, then also it has to be given in this paragraph. And even though there may be some case law which on the which the SSC is auditor is relied on or SSC is relied on, or there is a difference on that, whatever the base case may be, this has to be given in the this paragraph only. The issue regarding this audit report, which has been, we know all, it has to be nowadays form number 3CD and form 3CB is being uploaded by the assessee on the income tax portal. And once it has been uploaded with the digital signature of the auditor, are being approved by the assessee with his own portal. And the recommendation of the guidance note is there that this hard copy also should be signed by the even auditor. Take the print of the hard copy of that, and it has to be signed by the digital, signed by the auditor also. And this is now being understood is that the auditor is filing, and this has been accepted by the auditor, or accepted by the assessee only. When it is it is a complete on the process of furnishing of the audit report. Even though auditor has been uploaded and if the SSC has not accepted till that date time, it has not been treated as deemed as a audit report has been furnished on the portal. So it is me as a auditor also we should take care and insist our SSC also to timely accepted the this report and accept then it is be treated as furnishing of the report. As per the earlier advisory part of the institute is also there. Then that's form 3CD is the responsibility of the assessee, and once assessee is we should get the form 3CD signed by the assessee, and that signed copy only we have to be also be uploaded on the portal. Once, because this portal we are filling the form 3CD and giving the report on the in the form 3CB on the fill the document and getting a digital signature. It is also recommended that we need to attach our signed copy of the SSC. Signed copy SSC is to be attached with this on the portal, and the document which is a financial statement and the other document we should file signed copy. It will prove given the ID that the SSC has signed the copy and we have given our report to our duty is been only to uploading given the report on the the board has this TAQRB board has observed in this reports of the 3CB. The tax auditor has been uploading furnishing the return where the tax audit report notice reference has been given to the note of the qualification. They are not giving in the form number 3CB, but the reference has been given to the notes to form number 3CD. These notes also have additional information also, not only the qualification and disclaimer also. So the IS is recommended, even first is a recommendation is it has to be on the part of the report only in the form. If it has to be attached, are being attached as an extras to the form 3CD, then the qualification only has to be a separate and the other information has to be a separate being furnished and uploaded on the portal. These are the relating to the amount information about the forms of form requirement, and the guidance note also has provided the general principle for the auditing of the tax audit. This is para number which has been referring on in the para number 19.2 and 19.3 in the guidance note. where the guidance note has been given on the audit to be completed in the general principle of the audit. This is being given the if a judicial pronouncement is there, if any there, and then we on that basis, if auditor is rely on that, then the information either including it or excluding it, when the clause where it has to be, that has to be seen, principle has to be, okay, yes, rely on those judgment and it's to be consider that one. If there is a conflict between then, if there is a conflict between the judicial opinion between the assessee and the auditor, then this particular has to be specifically clause should be mentioned that the AS and guidance note of the issue of the institute has to be followed by the auditor. That is the general principle. While furnishing the information 3CD, the auditor should be considered the following. That is provided in para number 19.3. That is, if there is a information which is been provided in two clauses, there is cross references there, even one clause and also given in the another clause, the similar information is given, then the cross reference is given. Thus, we can see in this reference is the then gratuity is being provided under the by the assessee when payable to the provision has been made. Then the section 43B and the section 48(9) also 7 has also been there. When both the places this information has to be furnished, when the auditor is to required to give a one place information and the cross references to be given, the information is already provided in the that clause. If there is a difference of opinion then between the auditor, then also he has to state in the particular place. If it is place is sufficient, then it has to be in the para number 5 of the audit report in 3 fees D. If it is any column is in the tax audit report, then that column has if it's not applicable to the assessee, just like individual and the proprietary firm which we are discussing and the partnership firm, some clauses and references relating to the company only. This is not applicable. Or it may be a assessee is following the cash basis of account and there is ICDS is not applicable to them. Then it may be we have to write it is not applicable. Some in that it has been observed by the board, there is a blank as columns and space has been mentioned. Blank is there. The auditor is not filled the form. Either it is yes or no or not applicable or figure has been provided. It is been recommended that if there should not be any blank column. It has to be if not applicable, not applicable. If applicable, in then it has to be applicable and given the figures or provide the information. And another issue is the law is amending year by year. But if we see the form 3CD, that is very old form. It has not been amended from the long time. It is only the clauses has been inserted as per the information required further. So if the law, we have to see when we are filing the form, reviewing the form 3CD, we have to review in the case latest law applicable on the relevant year. If law for a relevant year has to be done, even though form is in the old provision are there, then the new relevant law has to be applied and it has to be provided accordingly. If there is any inefficient information has been not provided by the assessee and the information is not complete, or it may be some situation where the information is not compiled by the assessee, then this information is the audit report should not be delayed on that part. Then the reference has to be given in the para number 3 or 5 if it is affecting our financial statement. Then the para 3 if it is affecting the information in the 3CD. Then this para number 5 auditor is to be give the information that the information is not provided or inadequate and the qualification has to be provided. And the base, this report, which is the financial statement and the report is on the 3CD. This is reviewing on the basis of books of accounts, records, document information explanation made available to the auditor for his examination. In this respect, the information, whatever the books of account examine, maintained by the and provided and information is given. And the SSC auditor is also supposed to get the management representation on the points wherever explanation is required and time to time. And this is also the general principle. If auditor is rely on the judicial pronouncement as discussed earlier also, then he has to give in the para number 3 of the 3CO 35 wherever is relevant for that accounting point of view or information point of view. These are relating to the reporting part. We have decided general principle should be followed by the auditor in doing the audit of the proprietary firm as well as the partnership firm. There are changes in the financial, like as we say in the last slide and paragraph. If there is a change in the law, latest law has to be considered while preparing our report, and the information to be furnished in the Form 3CD as per the latest law. The Finance Act 2 2022 has provided the base changes. Their change is affecting our report of the current year in the case of proprietary and partnership firm. So we need to review those changes which are not in the part of the last year audit report. Now this is a new provisions which we should consider while preparing our report on the audit. The first change is relating to the section 2 subsection 12A in the Income Tax Act, which is related to the books of accounts. Books of accounts has been includes the ledger, day book, cash book, accounting books, and other books. Whether kept in the written. This is the earlier it was kept in a floppy disk or any other form of electronic money. Now the Act has amended and include in the writing form or electronic form or digital form or print out the data stored in the such electronic form or digital form as the baby. This red part is the new insertion of the in the section. How this affecting our audit report? Where you see there is a requirement in the Form 3CD, the maintenance of books and whether the requirement is notified or whether books are accounts has to be maintained. If maintained, whether proper are there or what are the report where it has been books of account are being placed. Location also have to be written, and what are the examination we have made in the now the book definition of the books of account has been enlarged in the act. So we should see these issue also when our accounts, SSC accounts are in the written form or electronic form or digital form. Or this information has to be accordingly. We have to furnish in the form 3 whether information has been furnished in 3CD or not. We need to review it. And another change has been inserted in section 14A. This section is deal with the exemption, whether this exemption when there is income which is not part of the total income, any expenditure incurred on that to earn that income or that is not to be allowable under the Income Tax Act. This section is deal with that. There are provision in the there are the judicial pronouncement where it has been held that when there is no income earned during the year, exempted income has been earned, then there should not be any disallowance about the income which is earned on this. There should not be any disallowance. Now the law has amended and inserted explanation in the 14A where it stated whether or not there is any income or not. If it is any expenses there, it is deemed to have it has to be disallowed. This has overruled the earlier judicial pronouncement. Now you see this is originally more used in the proprietary form. In the partnership form is whether the dividend income is there or capital gain is arising on that and there are expenses are there. Now the dividend is now taxable is there in the hand of the already not at it's taxable in the hand of the SSC. It's not more exempted. Then this section is more not have a usance in to prepare but there may be still have a exempted income which has to be considered. What are the expenses which has been incurred by the SSC to earn that income? Then another amendment in section 37 is there. We all aware earlier there are judicial pronouncement is there which is in the favor of the SSC that relating to violation of any provision in the Indian Medical Council. The medical this pharmaceuticals companies or assessees are giving a free samples or incentives to the doctors for the this for the profession to promote their business, and this has been held that is not a violation of any law, so it has to not to be disallowed in the hand of the assessee. And this has been amended, and uh, this and thereafter there is a law where another provisions are there when there is given any penalties relating to the foreign law and any compounding is there in the foreign law violation of any law, then there should not be any disallowance under section 37 related to fine and penalties. This has been covered by the an amendment in the inserted explanation one has been inserted, which covered the violation under the India as well as the outside India, and the any benefit and perquisite has been provided to the assessee, which is a violation of any law and rule and regulation, which is relating to the governing of the conduct of such person. Just like our institute is taking the conduct of the person governing the chartered accountant, if any perquisite and which is the violation as per the institute, then it has to be covered under that. And also the section 37 calculation one third part has been indeed any compounding of the offense is there either in India and outside India. That is also is treated as penalty, and then we have to report, see whether this has been reported in the form section 37 or not in this year. Then there another amendment is there in the section 40 subsec A Roman 2. This is relating to the tax disallowance of the income tax in the this income tax. There is a judicial pronouncement where it is says the tax it does not include the surcharge and cess. Now the law is amended with retrospective effect. So though we have to see section where the clause is required, information about the section 40A2, then this allows to be considered not only the tax part but also the surcharge and the cess also. Another amendment in section 20 by the Finance Act 2 2022 is relating to disallowance of the 43B. This is relating to the interest payment to the financial institutions and the banks, etc. The interest is, we all aware, is interest is allowable on the payment basis. There is debarred in the provision itself. If this interest has been converted into loan, then unless the loan has been paid, the interest is not deemed to have been paid, and it has to be disallowed under 43B. Now it has been proposed it has been inserted in the act. It is not only the interest which has been converted into the loan, if even it is converted into debentures and other instrument and liability, and then it also then 43B, then it is not to be treated as been paid unless the liability of payment of debentures and instrument has been considered paid. In that it will be not considered as paid. This has been blocked the loophole, and we need to see as a auditor when the disallowance under 43B is to be considered whether loan has been actually interest on loan has been actually paid or not. It should not be deemed paid, it has to be actually paid. Then another provision which is very important part in this year is the one section 194R. This is relating to the TDS on deducting on the benefit and the perquisite of the business and profession. This is more than 20,000 rupees if any benefit and perquisite is. Then the assessee is required to deduct the TDS at the 10%. This is relating to section 28 parallel to that, but there are differences there. If the section 28 talk about the business benefit and perquisite in kind only, wherever the section 194 or talk about the payment either in cash or in kind. If there is a cash, the TDS has to be deducted, and if it is in kind, they have to ensure that the TDS tax has been duly paid. This is a very important section in this year has been certified. We as a auditor, we should need to review it, whether this benefit, because whether any benefit and perquisite given in the during the business, then it has to be disallowed where the TDS has not been deducted by the proprietary firm or a partnership firm, and this benefit has been passed on, then that has to be reported, and it has to be disallowed also under section 40AI, as well as has to be reported in the short deduction 34A clause. The two places it has to be reported. Other way around, it has to be seen as a proprietary in the partnership firm when we have to see this compliance other way around, whether this our auditee proprietary in the partnership firm, whether TDS has been deducted on its part, so whether the benefit and privilege has been recorded as an income in the books of accounts or not. Form number 26 is, and the AIS information also include this information. So, doing the audit after this year, individual partnership firm and the proprietary firm, we should take care and verify the form number 26 AS also, where it has been seen whether there is any TDS has been deducted under 194R. If 194R TDS has been deducted, then we should ensure as an auditor whether this income on which TDS has been deducted duly incorporated in the financial statement as a profit or income as or not. If it has not been, then it has to be reported. Or if it is already uh, not reported or not reported, accordingly we have to report it in our report. This is a difference between the two, but this is in spite of that, the section 28 subsection clause 4 is talking about that there's a value or benefit whether converted into a rise from the business and exercise of the profession. Is talking there is a judgment on judicial pronouncement where it is very much clearly stated that is only applicable when it is kind only. But when we see the section 194, it's talk about the kind or in cash in both. So once TDS has been deducted, then we need to have our professional judgment whether it has to be included or not. It has to be in kind, then it has to be a section 28 to be as per the judicial pronouncement that is the income. If it is only in kind only, cash, no doubt it is once it is a cash, that is already a income under section 28 only. So once it is there in kind and TDS has been deducted, it has not been reported, then we have to report in our report. This all is a new law amendment in the provision. Initially, I have discussed about what are the requirement of our audit report, and thereafter the law amended over the years, which is applicable to in current years. Now we will see the clause by clause, some important clause. Not all clauses I will be covered in this our discussion. I will try to cover the maximum, whichever the important clause as relating to the proprietary and the proprietary partnership firm. This is based on the guidance note issued by the institute and the observation the board on these clauses information furnished by the auditors in the earlier year. First point, which is relating to the indirect taxes, which is clause number 4, talking about whether this assessee liable to pay indirect taxes, and if so, the registration number and GST number. The auditor in this in the guidance note, it has been advises and guidance is there that we should take the management representation from take the copy of the registration from our assessee to know about how much registration is there. Earlier in the last guidance notes 2022, there was saying if it is indirect taxes is applicable on the assessee and it has not been registered, then the auditor is required to be comment on that. But in this new revised tax audit guidance note 2023, this clause has been, this paragraph has been deleted. It with the intent is to we no need to comment on the whether the GST is applicable or not. We have to say whether it is registered and we registered, then we have to give the registration number. And if it more advisory in the guidance note is there, whether this reverse charge mechanism, if the registration is of the assessees, the proprietary form of partnership is there, because of the reverse charge mechanism only. Just like the freight or there is a sponsorship, etc., where there is a reverse charge mechanism is there. If that is so, then it has to be specifically mentioned that it is our indirect taxes is only on the purpose of reverse charge mechanism. That has been advisory in the guidance note. Next point is of discussion is the clause number 8, relevance clause. Where we have to give as the auditor has why the audit is being conducted under section 44AB. We all aware there is a 5 clauses in the this 44AB under which if the auditor is assesses fault, then only audit has to be required to be given. When there is a first is a if there is a total turnover and the is exceeding 1 crore rupees, and then that has been extended to 10 crore rupees in part 1. If it is all transaction receipt and payments are more than 95% is in the banking transactions and 5 not more than 5% in a cash transaction, then limit has been exceeded. So then the clause A is there. Then there is a professional is a clause B. This is the one first is the business is there, and the second is a clause is relating to professional. When receipt of the professional is more than 50 lakh rupees, there is a there. And third class is a presumptive tax is the 44 AE, 44 double B, and 44 triple B. When it is the presumptive tax is there, it is if the assessees opt for the presumptive tax applicability, that's okay. If it's not followed, accepting, then it has to go for the it has to be conducted the audit, get it run the audit. And the clause there is a 44 AD when the professional is receipt is less than 50% of the gross receipt, then either he has to pay the offer the tax on the 50% of the gross receipt or get his done the audit. Now the issue is relating to there the board has also and the guidance note also taken care of. This says this is a proviso under the section 44 AB where it is said if the audit of the any firm is getting done under the other act, then if audit has been done other than it deemed to have been done audit, and then audit is tax, then the only the tax audit is then 44 AB, this proviso will be applicable. Then the match clause 8, we need to give a reference of proviso only, not the clause A or B. It says very particularly observation of give the board also. Then the normally pupils auditors are giving this mentioning it the clause is should be A or B it in place of proviso to the section 44 AB. So this should be take care of our professional brothers should take care. The clause which is applicable should be correctly filled. If it is inaccurate, then the consequence a lot. We know we have already discussed the it has to be on correct clause which is applicable to the SSC. This proprietary firm, when we are doing the audit, we have been all seen the in the case of the proprietary, they are also after the COVID period, all the proprietary firms are in the trading, doing the trading business in the F and future and options are there. The future and options are there. There is a difference. People are professional have also a confusion about the what is the when we are taking the applicability of the section 44AB. What will be the how to compute the turnover of that? In that, the guidance note is very much provided in very clearly provided in law that how to compute the in the case of trading of derivatives, futures and options. This has given in the paragraph where it says only the in the derivatives when there is a future and options are there are favorable and unfavorable differences are there. So when the total of the turnover as for the audit is there, then need to add favorable and unfavorable, and total of that will be treated as a turnover. And the further it has been provided, if any premium has been paid on the sale of the option is there, and that premium has been considered for the net profit of the transaction, then it has not to be concluded. Otherwise, it has to concluded in the part of the turnover. And in respect of reverse trading entry, trader and trades, in this case, if any reverse trade has been entered, the difference there on also be a part of the turnover. And there is also earlier up to the last guidance note, there was a confusion between the professional as well as SSC. In the case of when the open option is there that has not been concluded at the year end, whether to be included or not to include. This now has been very much clarified in this financial guidance note that turnover arising from the transaction should be considered in the financial year when this actually square up, not in the year when if it is open, then it is not a part of turnover. If it is when it is squared up, in means if it is next year, it has to be considered at the part of the turnover. And also clarify further in the guidance note in the this turnover issue in the case of delivery based settlement in the derivatives. The difference between the trade price and the settlement price should be considered as a turnover. And further stated in that their underlying assets is transfer is the underlying asset, then the sale consideration to be a part of the trading and turnover. This is I am discussing because this is a lot of issues on this is considering by the auditor and confusion become our professional brother. This is very much clearly explained in our guidance note, how to deal with this turnover part in the case of trading in derivative. This normally you see in these proprietary firms are more deal in this, active in this transactions. Or if only there may be a case when there is no business is there of the party, the only the party is assessee is trading in the derivative only, then we have to see whether the turnover is exceeding 1 crore or not. It's very much clear then all these transactions are future and options are through the banking channel only. If it is only then when the 10 if the transactions are more than 10 crore only, then it is only they are liable to let's audit under the 44 AB. Otherwise, they are not. There may be a there may be a case where they have other business also in the trading and the derivative. Then we have to see the both that together, not only isolation. When only that derivatives are there, then we have to do the proprietary as a isolation only. Now next is the clause 49A about the forms. The 3CD form is required to whether there is a partnership form. If it is a partnership form, then it's a indicate the name of the partner and their profit sharing ratio. There may be a chances where there may be a case there during the year there is change in the profit sharing ratio. Then this change also has to be reported. These are not only the profit sharing. In this, our guidance note has been guide us that we should take the copy of the revised partnership deed where this deed has been executed, and on that basis only we have to need to give the comment on the information furnished. And there may be a case of LLP. LLP, if an audit is there, the form, then it's a relevant document has to be seen which has been filed with the LLP Act under the LLP Act. And if it is a partnership form is registered with the registrar of firm, then the information which has been furnished, if there any changes there partnership, what are the information deed has been submitted with the registrar of firms. And there may be when there is LLP, then there are maybe a minutes are being recorded. Then we need to see that also we should obtain the information about this minutes also. The tax auditor should take the copy of the deed document understanding notice of changes, including certificate copy. These are being recommended in our guidance note. Now also there is if any change is there in the partnership deed, then also as compared to the last preceding year, we have to compare what are the ratio amongst the partnership firm partners among, and what is during the year. Any changes there, then we have to report under clause 9B. The changes we have to give the column wise last what are the earlier one and what are the newly our ratios are there. This is very important from this. This clause is very important relating to clause number 32A, which relate to the carry forward or brought forward losses or depreciation allowance in the following cases. Section says 32 is relating to the information is to be, we have to, as an auditor, we have to review the information about the brought forward losses or depreciation in the following manner, has to be given in the detail. In case of the partnership firm, if the partner are changed, then the section 78 has been relevant to deal it. If the partners has changed, the ratio has been changed. The partner has been, if partners has leave the partnership firm, ratio is remain same. Then we have to address to see the section 78, which is very important. Which is say that if the partner who is left, the ratio as compared to the company section 79, where it says 51%, 50% of the sharing ratio is not changed 51%. Here it is says even the partner who is even 10% of the share, if he left the firm, now the loss to the extent of that percentage has to be not been eligible to be carried forward in the next year. So as an auditor, we should see that also important part as a partnership firm. This is relating to the nature of the business of the professional. Business and profession is a part. If more than one business is there, then the information under this has to be furnished in business. This has been observed by the our board also, that this information has been not been furnished properly. The information has to be furnished in the relating to the all the businesses there, whatever the business are there. Code of all the business activity has to be reported. In the proprietary firm, there may be a place where there is a partnership, a proprietor have a proprietor of the more than one proprietary firm. Then it has to be, or it may be a case where the proprietary firm has a different business in the same proprietary firm, which is maybe a trading, manufacturing services also. Then we need to check this. All business has to be reported. This is very important also to give the there to report here, check the report. The moreover, it is also their question is discussing in the professional also, when proprietary firms has a more than one business and all business have a separate balance sheet has been prepared. So what to do with these balance sheets? Whether it is required to be prepared consolidated balance sheet along to be attached with, or it has to be separate balance sheet or financial statement for all the business separately as a proprietary name. In my understanding, we should have consolidate the balance sheet, attach that balance sheet, and give the complete information. There is a business, separate business are there, separate numbers are there, and Form 3CD is only one can be filed, and one PAN then cannot be more than one Form 3CD can be filed. So in this implication, one form has to be filed 3CD only. The consolidated figure has to be furnished on that this report only. If even more than one business is there, the proprietary proprietor firm, then it may be you file all the balance sheet. When the figure has to be consolidated, then this has to be reported, and the disclosure has to be made in the report form 3CB. Next clause, which is important in the point of view, is what are the books of account has been prescribed, maintained, and examined. There are books are maintained prescribed under the Act, whether there is only for a professional, not for the business, and specified by professional only. And maintenance is there, whether prescribed or not, query is there, then the maintenance is there only. And server is located in the cloud only. There, then here the location has to be addressed in our report to be the cloud, where the books are stored on cloud or online. The IP address should be reported as a place of record, book of account. And there may be a case where the IP address is not a unique, not a unique and is a dynamic IP. When this is, there is no discussion about this is in the taken in the guidance note. But in my understanding, when there is a dynamic IP, then the name of the cloud should be mentioned here, where the books have been located. Then, what are the book has been examined? This guidance note says the books of not only the books of accounts has been examined, there also a document are being examined by the auditor need to be examined. These may be a voucher, their bills and debit note, credit note, agreements, TDI returns, GST returns. These all are being need to be reviewed by the auditor before commenting on this clause. So this examination is a wider than maintenance is required and the prescribed. These three things has been not made similarity. But in our, we have seen in the professional, this only the same information is saying the examination and what are the maintenance. So maintenance is a different than the maintenance examination. This has been also be noted by the board while commenting on this the reporting by the auditor. The section talking about the prescribed by the any act. No book has been prescribed for the business, but in this has been noted that the when till the this uploading the form 3CD, the professional auditor has been saying it is yes only in place of no. This has to be noted. Only the professionals has been prescribed books of account, not the professional business. So it should be no there. And uh, and the further comments noted by the our this board is there about the books of accounts, nature of relevant document examined. The books have been examined include the invoice, receipt, voucher, etc. But the reporting part, when the professional are reporting, it is only stating the books of account and stated the etc. etc. The board has observed this is not the correct way of mentioning the etc. It has to be listed the all the documents which have been examined. This is a observation which has to be taken note by our professional brother. This is a clause. Next clause is 12 is there where the requirement is there if any income is included in the assessee which is under the presumptive taxation. This is 44 AD, 40 AE, 40 F, 40 B, 44 BB, 40 BB. These all are checked. There may be a section is not there, but it's a report is there. So in this regard, the guidance note is guiding us to how to maintain. They say the how the turnover has to be checked in the under the presumptive tax. This under section this reporting in the paragraph 24.6, where the guidance note guide us that it is advised the basic record has to be maintained by the assessee to to on the basis of which we can it can be verified that the what is the turnover of their presumptive tax is applicable or not. Unless because this presumptive is only on the basis of the limitation is a turnover also. If turnover is exceeding, then the presumption is not to be available to assessee. So basic record has to be maintained when this is there. It has to be verified before commenting on this. The further it says the paragraph 24.5 of the this guidance note, there may be a circumstances they stated there is a two part is there. There is a presumptive income is there as well as the other income is there to the auditor. There may be the turnover of the total is not exceeding the prescribed limit. If that is the case, then the only audit has to be taken if a SSC is not if proprietary is not opt for the presumptive taxation. Then the section 44 ABC is to be addressed as under which the audit is to be taken place. Now the audit is taken place on the only the presumptive tax income only. There are chances there have a business other business which is not covered under this. There is not covered under the presumptive tax, and but its turnover is also not exceeding subject to tax audit. When the as a proprietor only 44 ABC as which is presumptive tax only a need to be tax audit only that part. The other part need not to be a tax. Just like the commission agent. Commission agent is not covered under the 44 AB clause C. 44 AB clause C is if a agent is not covered, then there may be he has a business where the presumptive income is there, and there is also have a separate income of the commission is, but he's not exceeding the limit total exceeding the limit of 1 crore rupees or 2 crore rupees. The then an audit is not required to be for the commission agency. Only the presumptive income has to be audited by the auditor. Method of accounting. This is a clause 13A. There is an act also providing there's two method of accounting, cash basis account and mercantile basis. Then has to be reported under the when we are doing the audit. There may be a case where the more than one business is there, and the OCC has option to follow the different method of accounting for each source of income or each business. In one business, SSC may opt for the mercantile basis of accounting. Another business, it may be a cash basis of accounting. When there is cash basis or mercantile basis are there, but then do you see the form is there. Form 3CD is and upload only permitting give you the only one income. You can only do the one part, only the mercantile or cash basis. If you have a more than one business, then even this option is not available on the portal when you fill the form 3CD. So in that case, it has to be you fill the one business and give the information about the other business, and different method is following as a note to the form 3CD. Form notes can be given and the references to be given in the main report 3CB part para 5, where the mention there is a income clause number and where there's a more than one business, and the method of accounting is followed differently, and this is a disclosure has been to be given so that the department may have a clear information about the more than one business and the different method has been followed by the SSC. Then the next clause is about relating to the ICDS. ICDS is applicable, we know it's applicable to the SSC, which is follow the mercantile basis. If the proprietary firm or partnership firm follow the cash basis of accounting, then this clause is not applicable to them. Then only we have to refer only the not applicable. If there is a mercantile basis of accounting and the business and is there and profession is there, then this clause has to be given. Report has to be given in two parts. Is relevant is just whether there are 10 ICDS has been reported till today, and about out of that 10, 8 is required where the disclosure has to be required, and the information has to be asked in the form 3CD is relating to the income part. If there is any income is income because of the ICDS it's not being complied, then whether it is affecting the income also because of that, whether increase the profit or decrease the profit, it has to be reported, detail has to be furnished. For that, guidance note is giving that SSC, the auditor is to be obtained from the SSC a computation of total income and the disclosure requirement. On that basis only, all the whatever the 10 ICDs are there, whether these whether effect is nil or there may be a chance when there is not even not applicable is there, but there is no clause is their column is there not applicable, only available is a profit increase or not increase. So then increase and decrease has to be given, yes or no. There should not be any blank column should be remain about this, and this report has to be on SSC has given the computation of income, and the auditor has basis on that is taken the verified. This SSC has taken the computation of income from the SSC and consider while verifying the information furnished in the 3CD this clause, then it has to be in the report in the form 3B part 5 that is information on the basis of that information it has been verified. This is the observation is the of the board on this clause information 13D and E. It has been observed that the disclosure under the not fully disclosed, and in reporting it done not just blank is there, no reporting is there. It is advised by the guidance note as also there the adjustment there should be either 0 or nil should be mentioned. If there is no data is there, it has to be there. In the disclosure also, there is a requirement in the ICDS. All SSCs need to give the disclosure about the 8 ICDS. The mainly it has been observed normally is we are giving the reference to the our financial statement that referred the disclosure in the accounting standard. There are not the disclosure as per the ICDS as and the disclosure and the accounting policy as required by the accounting standard. There are gap in between the two. So there need to be when there is a gap, there should not be a reference only. We need to give the detail about that. This we can check in the case of the valuation of uh, valuation of inventory also, where the ICDS2 is there and the AS2 is there. Their method is almost a similar, but there is a difference. In the ICDS2, the inventory is to be valued as the cost or net realizable value, whichever is lower. Whereas in the AS2, its inventory is required to be a lower of the cost and net realizable value. These two are different. So if we are referring to the one in the ICDS, referring and which is follow the AS2, then this is not a similar. Then the ICDS disclosure requirement has not been complied. This need to be noted, and there is a difference between these two. We have to take care and give the complete information. There may be a limitation in the IT portal about the disclosure requirement. There is a voluminous in nature and the disclosure is here, particular ICDS. So it is advisory by the recommended in the guidance note. In those cases, proprietary firms or the partnership where there is a disclosure requirement is there and the drop down space is lesser, then the correct way is to give the attachment to the that as a hard copy and attach to the this to the form 3CD. So the whole disclaimer give a reference to the that. Next clause is relating to
Sorry
the.
to interrupt you, sir. Really sorry
Yes, sir.
for interruption. Actually, we need to take Q&A session by 7:40.
Okay.
So please take this Q&A by 7:40.
Okay. Thank you.
Thank you so much, sir. Thank you.
Now the clause 14A method of valuation of closing stock is to employed. It has been observed by the board. Then this is complete detail has not been given for the raw material, work in progress, etc. Only the raw material or some part has been given. The complete detail are not being given. As per the, I take the important part only. Then clause number 14B is talk about the difference in 145A. 145A is relating to the sale, purchase, and the stock to be inclusive math to include the in the cess and the GST, etc., which has been we get the credit of that. It has to be included in there. It means inclusive method has to be followed as per the income tax act. Where the as per the AS2, the exclusive method is there. We all aware there is no difference normally is affecting the this there is no difference on the impact on the inclusive or exclusive matter on the profit when it has been in the guidance note, but it has been observed that effect this information is not being furnished by the professional. As a proprietary firm, there is an the accountant is not competent to able to compile the information. So in that cases, the information are not being furnishing. So it has been observed that incomplete information is there or not information has been filed in this. This is relating to fixed assets in being fixed asset detail, which addition to fixed asset clause 18D is there, where the it as the board has observed when the sale items are there, more sales items are there, then item list is more. But the auditor is only giving the one date and all the sale has been reported, which is not correct. As well as in the single consolidated figure are being reported, where the all purchases are there. Half one it is taking more than 180 days or is more than less than 180 days, once consolidated figures are being filled by the assessee in the Form 3CD, which is not correctly, it has to be complete. Similarly, there is been differences have been observed in clause number 21B, where we are reporting is requirement of section 40AI and 40AIE, which deal about the non-deduction or deduction of the TDS, disallowance of the expense for non-deduction of the TDS payment to the resident or non-resident. In that case, there has been found that is only the provision when the provision is made on the consolidated figures are being given, party wise detail are not being given, random information has been given. This is observed by the board. It is not a correct way of it. Has the complete detail has to be furnished and it has to be cross-examined. Wherever there is a nil or not, blank should not be there. It has to be, if it is applicable, then it has to be given. This is relating to the clause 21C, which is relating to the partnership form only when it is a remuneration are being given to the partners and interest. And this clause is relating to the not only the payment, it is only about the inadmissible, whatever the inadmissible expenses to be reported here. In that cases, we need to, as a partnership firm, we need to check the partnership deed. From there, whether this is as per the deed only, that only amount is allowable, and the further limit is provided in the act itself. The computation has to be taken from the HSC, and that basis book profit has to be seen, and add back this professional remuneration. On that basis, apply that we need to compute and very clearly we have to give the computation also. Not only the individual, the computation part also has to be given in this clause also. In this reference, in the board has also this guidance note also referring to the circular number 379 of 96, which is very clearly stated the remuneration has to be has to be determined in the not only the year end, it has to be determined as the actual this is a circular is saying if it is not determined as per the limit is there, that is not allowable. It has to be determined 25 as per the limit has to be given in the deed only. In the contingency liability as clause number 21G, the contingency is there. We have to the auditor has to review only in the case of individual and the notes to accounts if information has to be given as a requirement is there contingent liability. But in that clause only, the whatever contingent liability debit to profit and loss account has to be given, not on the notes to account, but a contingency liability is there. This is a clause number 22 about the MSME. This we all are aware MSME when the interest is paid to them as per the MSMED Act, then it not to be allowable under the income tax. That report have to be given. But it is also required under that Act, Section 22 of the MSMED Act also required. But wherever the person is there, required to get in audit, then the information has to be furnished by the person. We all have a impression in the professional lobby that the information only required to be given this MSCME in the case of the corporate assessee only and not in the other case. But in this act itself be required, this information has to be given in the MSME also. This information is very much also guided by our guidance note, need to be covered under this. We need to given in the financial statement, not under the 3CD. This is requirement under the financial statement. So it should be a part of the financial statement of the proprietary and partnership firm where this information has to given. If this information not has been furnished, then we have auditor has to qualify in their report in the clause paragraph 3 only that the financial statement is not given the correct information. This is relating to clause number 23 relating to payment to a person specified under 48(2)(b). This list has to be obtained from the assessee about the related party of an individual and the concern in which individual and relative has a substantial interest. Substantial interest already provided in the section is the more than 20%. This list has to be seen. And here a amount has to be given. There is no disallowance and allowability as there. Under this clause, only auditor has to check the payment made to these person only, not only the disallowance part. And next clause is clause number 25, section 41, which is relating to the information. If the allowability expense has been allowed or earlier year, expenses allowance has been considered in earlier allowable and subsequently written back in the books of account, and then the credit to either credit or not credit to the profit. There may be a possibility. This information is required to be given by the auditor in 41 clause number 25. This information has to be given. The computation part also, how to compute that one. The disclosure also is required to be given in this case. Normally, this information is credited to the P&L account. Once it is credited to the P&L account, when this information has to be given that it's already credited, it's a cross reference has to be given. That otherwise, the double disallowance, double addition has been made by the while the processing the returns. And this is relating to the one judgment of Supreme Court is there with a limitation period is whether section 41 is there. There's a guidance note is clearly provided. The limitation period is there, will not applicable in that cases. That is given in the Supreme Court judgment. Then the limitation is not applicable while giving the information under section 41A1. This is a clause 27A and clause B, which is relating to the SANVIT. Now we all aware this SANVIT Act is SANVIT is there. Excise is Act is information is not required to is required only the SANVIT information is there. Now this GST has consumed with the merged with this thing. All the information only the item which is left only the SANVIT is only the petroleum crude, diesel, petrol, aviation, turbine fuel, natural gas, and tobacco. Only these information required to be given under this clause. But when you see the portal, it is talking about the GST also. GST as per the form, when you see the form is there. Form is not required to be given this information, but the portal is given. So once portal is required, eczema is required, but the disclosure is required to be given. That information is not to be given as per the guidance note also. This is a clause, this is country different. We see the important part only, the check. This is a chapter 6A deductions are there when the sole proprietor is there. When the partnership proprietor is there, then you see there is accounts are there, the sole proprietor. It may be a possibility there the books of accounts have been made and the all admissible deductions under chapter 6A are not being paid from that business business account. When the proprietary business account has not been there, then the report under this is not required to be given. Since the payment as with the books of account which we are examined, these payment has not been provided. So this information is to be given restricted to the only this information which is already made payment from the financials only. And disclaimer of this has to be given in our audit report that the SSC may claim the deduction under chapter 6A when where that is paid from this personal separate account. There may be a chances when the SSC is having a consolidated books of account, individual as well as the his business income. Only the one accounts are there. Then it is we have to give we may can able to position to verify that. When is option for the new regime, then no deduction is available. Then we have to see that if it is option for the new regime, clause 8A, we have given the new regime, then no deduction is required to be given. Then the issue of the GST clause 44, which is to be given, there's a guidance note has been very clearly provided in the what are the how to we have to what are covered, what are not covered. I recommended you must gone through this clauses where it stated this is not only the advice need to be given the information, only the information about the total expenditure has to be given. and need not to be a reconciliation. There is a provided in the guidance note. We have to make this reconciliation in our file. The total expenditure, what are the P&L account is there, and add the total capital expenditure, not part of the included, which is a part of payment to the registered dealer or unregistered dealer. When there are expenditure which are not cash charges considered, just like a depreciation and return of bad debt return off, these are not part of the, then total will not valid. When there are the transaction maybe which is exempted also, then these reconciliation need to be placed at our record. Then the guidance note also says the disclosure, whatever the basis of your auditor has taken verification, the meaning, what are the meaning has taken the total expenditure, method of filling of the approved column, and that has to be disclosed in the form 3CD. And these are the disclaimer we may give this. Required information relating to the expenses are pertaining to entity fall under the composite scheme. Those which can be verified, which cannot be verified, how we have verified, this need to be disclosed. We can disclose as example given. This checklist has been provided by the guidance note. This checklist information we need to obtain from our SSC. And the last point is about the revision, whether the SSC need to revise the auditor is mandatory to revise the audit report in the cases where now the case issue is our report has to be furnished 1 month before the due date of filing of return. There is 1 month is there. There are chances when the SSC deposit the taxes overpayment has been made under the 43B, where once it is paid, as per the provision of section says it is allowable till the date of filing of return, and the report is filed 1 month before. So in that case, section 40A I and 43B, these two sections are relevant, which may be affecting, and the rules 6G of subsection 3 also stated that thing, where the auditor may revise the audit report if on that two bases are there, section 40 and section 43B. And that case is there, then the recommendation is my side is there. When the engagement letter itself, we should say pay the payment before the due date of furnishing our tax audit report, or we should say if it is a revised, it's required to be given, then the additional fees to be charged on that way. Only further issue is the relating to the disclaimer. Disclaimer and guidance note is also required as suggested. We should give the disclaimer wherever these samples are there when there are payment in cash on about the payment expenditure or the loans payment. When we succeed, do not have a record of the payment of whether account pay check or electronic, then we have to give the disclaimer. We rely on the information available with the SSC. This way, when we are verifying the TDS part verification, then we have to give the compliance. We are test basis, we are verifying the TDS, not complete information is verified. Significance non-compliance is not found in that case. And the micro is information is there selected when the payment to the related party, we have to see the list as provided by the specified person by the SSC only. This type of information we have to disclosure has to be given in this way. This is all from my side, trying to give you the overview and the issues which are maybe arise from the audit of the proprietary and the partnership firm. This is all from my side. Thank you very much for the patience. If any questions are there, I am welcome and available for that.
Thank you so much, sir. Thank you so much. Before we are moving ahead to the Q&A session, there are 3 common questions which has been asked, like what about the CPERs? It's a self-declaration form. You need to fill it up on the SSP portal, first of all. And second one is, where do we get these PPTs? We'll get these PPT from taqrb.icai.org site. You can open that site. There's a knowledge sharing tab, and under that seminar and conferences column is also there. You can go ahead under PPT of webinars. Moreover, we can get information about our upcoming event also from that tab, events tab. Next is sharing of queries. Regarding queries, you can email your queries to taqrb@icai.in, highlighting the name of the speaker whom you can ask the queries. Again, we'll be beginning with the queries.
We are not able to see the screen. Is possible to see the screen? Hello.
Hello, yes, sir.
I am not able to see the screen. Screen is not visible.
Am I visible to you, sir?
No, not. That is the reason.
Baldev sir, C is visible.
Sorry.
Your video is mute, sir. Kindly unmute your video.
Video where is there?
Baldev sir, I'm visible, I think.
Okay.
Both
Am I visible now? Okay, moving
both
ahead
of you are
to
visible.
our, thank you so much. Moving ahead to our first question. Baldev sir, the first question is, if a partnership firm filed ITR for financial year 2015-16 as per section 44 AD, and from financial year 2016-17 to financial year 2021 to 22, that is 6 years, filed audit report under section 44 AB to lower profit. Now for financial year 2022 to 23, firm's turnover is 90 lakhs and net profit is rupees 4 lakhs. That is below 8% or 6%. Whether we require to file tax audit under section 44 AB clause E or not, because 5 years of disqualification as per is section is 44 AD 4 completed. So we file ITR without tax audit under section 44 AB? I think, Baldev sir, you are mute. You're on mute, sir.
Able to hear me?
Yeah. Yes, sir.
You see, the 5 years is from which year? It has in last 5 years, till 15 to 22. The SSC has filed the exemptive tax. The last, we need to see from the last, even all 5 years has to be. He has to come any of the 5 years, then it is not the first year we have to see. In last 5 years. In next 5 years, he has to follow the cycle of that one, not the on 1 year. It's my understanding, it is required to file the audit report.
Okay, thank you so much, sir. In between, I would like to tell you all that we have right now 2265 visible people who are on live right now. Thank you so much for making this webinar so impactful. Next, moving ahead to our second question, whether tax audit under income tax is required for cooperative housing society where turnover is less than 1 crore, but audit is required as per State Cooperative Housing Society Act.
Okay. If it is so, then two issues are there. Whether under which clause it is audit is required as per the proviso. If, as we have discussed in the case, cooperative society is required to get audit in under the Cooperative Act, then this we have to see in this is as per the proviso. We need to file the form 3CA and 3CD, not the 3CB. First thing. And this is applicable not as per the clause 1, A or B. A, it has to be as per the proviso only. Next.
Right, sir.
Hello.
Right,
yeah.
sir. Thank you so much. Next question is, if proprietor has main place of business and location at Mumbai and has another branch at Gujarat, Mumbai office and branch tax audit report is desperately done by two CAs. For
Okay.
uploading two tax audit report on same PAN number, what option is there?
You see, it has to be only. I have already discussed earlier also in my presentation also. There may be a possibility that the proprietor has a more than one business. It a separate business and the separate accounts are there. Then just like a head office in the one as the main office, just location is there Gujarat and Bombay as you are in this question. Then it has to be one branch auditor has to be audited and that has to compile and the disclosure has to be given. And this is audited by the other auditor and this has been considered and uploading the one. It has to, as I already discussed, it's a one PAN only one report can be filed. So either it is consolidated the one auditor, consolidator auditor should be report with the both the audit, or it should attach to that and compile the information and give a disclosure that has been compiled as audited by the other partner, other auditor.
Absolutely, sir. Thank you. Next is most of the assessees not able to provide the details as required under clause 44 of Form 3CD. Tax auditor's role may please be explained.
Clause number 44 is if you gone through this, if we have also discussed in the principal, general principle guidelines as given with the tax audit guidance note also. If the information has been not been provided by the compiled by the SSC or not provided by the SSC, we need to qualify our report and the qualification has to be given on this part. SSC is not provided the information and not been compiled. Then we need to see also that because this is just like a 44, only the information is there. Form 3CD, it is not affecting my financials only. This is only information in 3CD. When we need to give only the clause 3CB part, clause para 5 only. The information has not been provided and we are not in a position to comment on that. And if you see the guidance note also, there is also given in the some example performa of the disclaimer also on this part also. It can be followed in using that performa while filing this report.
Okay, sir. Thank you. Next is a professional architect. Gross receipt is 28 lakhs. Net profit is 9 lakhs. Books of accounts maintained and filed return with balance sheet without audit before 31st July. Tax audit is mandatory.
You see he's a professional only. Architect is come under the profession, not on the business. So less than 50 lakh, he has to give the 50% of the income as a business professional income. So audit is required to be done as a wrong, by mistake it has been written, has been filed without the audit. He can revise the return and file the audit report as right now also.
Okay. Thank you, sir. Next is in which clause CSR expenditure is to be shown?
There is no specific column is given under this CSR, but we can give under section 37. There's the expenses is their general personal nature or that on that places only we can give. Specific clause is not given in the CSR.
Okay, sir. Next is what if cash sales as proportion of total sales is much higher than in past years and these are just to inflate sales to impress bankers to obtain loan? Do we need to modify our opinion in Form 3CB?
Can you repeat the question? I'm not able to hear.
What if cash sales as proportion of total sales is much higher than in past years and these are just to inflate sales to impress bankers to obtain loan? Do we need to modify our opinion in Form 3CB?
Because of the bank loan, we don't need to give any opinion on that. We have to give our opinion on the basis of financial as well as the tax audit information only. For the banker point of view, we should not give any info.
Okay. Proprietorship and partnership firm turnover more than 2 crore but less than 10 crore and cash proportion is less than 5%. Then tax audit is not applicable even profit is less than 6% or 8%. Is that so?
If it is, you see, these all independent clauses are there. This is not the way he need to check the each A, B, C, D, E, E. All has to be exclusive information. If this is only for the 1 crore to 10 crore, only have to see one parameter about it. If it is a part as a presumptive tax, is part is less than 2 crore rupees is there, and fall under the presumptive tax category, then it is required to be given audit. This is fall under E only. So all A, B, C, D, E, it's all has to exclusively to the test, not only the one test is there.
Correct, sir. Question number 9. Cash introduced by proprietor in his capital account to be reported anywhere in 3CD.
Proprietary form, there is no requirement is in the form 3CD where we have to report that the cash. You see the cash, we have to audit our financials only, financial statement on the basis of the financial statement in the book, document and information provided by the proprietor only. If it's introducing a cash only, then it is we have to report on that basis only. There is no basis column and other place I found in which is required to be reported.
Next is it compulsory to upload audit report and final account duly signed and scanned or unsigned mentioned SD? Will do because auditor and client digital signature required to upload audit report and final account.
If you see all the financials we are giving as a auditor, we have to audit the financial statement, and the information from 3CD has been provided by the assessee only. That I have discussed in my lecture also, in the proceeding also. So first we need to get it signed by the management or a proprietor or partnership firm, partners only, to give me on my report. Unless it is signed, how I given my report only? Unsigned accounts cannot be available for me to give in my report. Even though I have digital sign, they may digital sign it on the, but signed copy need to be, or it may be a certified true copy we will obtain from the partnership firm by a partner or a thrice person also, but it has to be signed only.
In other income, whether personal income of proprietor to be required to be reported, or we restrict our report to books of account only, for example, personal bank statement transactions.
This all depends upon the accounts maintained by the proprietor. If it is this bank statement or personal account has not been incorporated in the business account, it is a separate business account has been maintained, then no need to be comment on that transaction. It may be a rental income, it may be a salary income, it may be a other source, bank interest, etc. It is not to be reported. But if only one consolidated accounts are being prepared, then it has to be reported on our comment report only.
Thank you so much, sir. Thank you. And thank you so much for your timing, sir. And sharing your words of wisdom. Thank you so much, and making this webinar so impactful. Thank you, sir. Thank you, Raj, sir.
Thank you to all my colleagues patiently hearing me and giving this opportunity to interact with my colleagues. I hope all have been benefited by whatever I experienced. I've shared my experience only. Thank you very much to all. Thank you.
Thank you so much, sir, for sharing your vast experience with us. Thank you, whole technical team, for without whom we could not be able to see that insightful slides also. Thank you so much, everyone. Raj, sir?
Yes, sir.
Hello?
Hanji.
Raj Chavla, sir, is there?
No, ma'am, Raj Chavla sir is not there.
Okay. Thank you so much, everyone. Thank you. Thank you, ICI.
Okay, thanks. Bye.